Good. So just now I stepped on the panel and someone said to me, good luck. That came from the car carrier industry. So I'm pleased to be here today to speak about offshore wind. I think over the last years it has been growing. I'm a biased moderator. I'm working for Purus Marine. We do invest and own and operate wind assets. So we see it as a growth area, part of the energy transition. Most of our operations are currently in Europe, but we do look towards Asia. And I thought I have a very, very nice panel here, actually. When you look around, I think we have people who are looking at designing and building vessels. We have people like ourselves owning CTVs and CSOVs. We have a company focusing on wind installation and even early phase development. So you will see the whole life cycle of an offshore wind farm, basically, up to decommissioning. We have a slide there because I'm mindful, I've been in Asia for 15 years, I'm mindful that offshore wind is growing in parts of this region, particularly in China. It is a big industry. Most of us won't touch it in China because it's a very, very remote part of the wind industry. So we are not active in China. It has its regional nuances. But I think what I wanted to bring, and this is from Clarksons, it's not from us, it's not from me, right? So please don't ask too many questions. I'm an ex-banker. But it is growing. So the demand forecast is significant. And what we are trying to do here on the panel is to support the infrastructure to build the wind farms. So when you see it, you will see that the gigawatt of offshore wind is supposed to grow to 200 million. We are currently at 38 million probably, and that over the next 7 years. So you can imagine the maritime assets associated with it needs to grow rapidly as well. So there's a shortage of supply, maybe in the short term, maybe medium term, long term, but it's a challenge we have to face and the industry has to face. At the same time, I'm mindful maybe not everybody is familiar, and now I'll do a little bit of marketing, what we are doing, is familiar with what offshore wind actually comprises. And you will see a life cycle of a wind farm has approximately 25 years. It starts very often with survey vessels, you have foundation installation vessels, you have cable laying vessel, you have wind turbine installation vessels, and ultimately what we are doing as part of the supply chain is we are doing CSOVs and CTVs. So you will see that a significant amount of assets are required, and each asset has its own technological requirements. Each asset fulfills a certain part of the life cycle. Each asset works in tandem very often with parts of the industry. So I think it wanted to leave this up there so you have an understanding what we as a company and what we are actually doing from time to time. So and with this, I leave it with you, and I want to shortly introduce the panel. So we have Bjørn, working, please correct me if I pronounce it wrongly, with Havfram, and you are predominantly active in wind installation space. Then we have Ingmar, who I've known for a while, and some of you might know him. He's actually from the banking industry in the old days. So we worked together, and has moved more to the commercial side. And he's looking, and you correct me later if I'm wrong or no, he's looking at designing and actually building potential CTVs. There was an announcement in the press. And ultimately we have Steve G, also an ex-colleague of mine. We worked very, very long together, and we want all money from Steve to build those vessels. So I'm sorry to say, Steve, you're on the hotspot today, because we are all finance people or ex-finance people, and part of the resources needed is people, part of the resources is assets, but part of the resources is also the funding. So I leave it with it. I asked the first questions, and I will sit down, but I want to ask this question to Bjørn. Where does he, in particular for his company, see the demand and the growth in offshore wind, and gives his views on the industry?
Yeah, thank you. So to start off, I think, Havfram, we're active in the early phase development and also wind turbine installation vessels, which means that we start with pen and paper in the early phase development before the wind farm is being built and planned together with the authorities around the world. And then we end the value chain as such with the wind turbine installation vessels, where you basically get electricity. So we see the demand push supporting that slide that was just shown from the early phase development, where we see 70% of the countries across the globe have a coastline. They're all, I would say, looking into potential offshore wind parks. And that is, of course, trickling down to the wind turbine installation vessels, where we have 2 vessels on order in China, where we see that the developers are actively pursuing to source vessels right now. And of course, there are different markets. We have the European markets where we have our main focus, where we have contracts for the 2 vessels up until 2029. That is fairly developed. So we see a high demand and a high penetration of projects where we can actually build a proper backlog for our vessels. Then you have the US market. That is I would say a unicorn. I guess I can say that here. Where you don't have that similar amount of penetration or projects, where basically you can't necessarily build a vessel and build that proper backlog and defend the investment. And then you have the Asian market, more similar as in Europe, where you can also utilize the same vessels. That is also growing extensively, and you see an increasing amount of interaction with Asian customers. So demand is definitely there, and take it down to the wind turbine installation vessels. We're seeing up until 2030, we would require about 30 additional vessels to cater for the projects. And that is after removing a lot of the European projects from our pipeline. We don't necessarily see that they will see a final investment decision. And that's before adding the Asian projects and the Asian backlogs. So I can say on the demand side, that of course is something we see from a day-to-day basis. On the supply side, there's also, of course, a massive shortage of vessels. We count around 9 vessels that can compete with us today, and we need another 30 vessels over the next 5 to 7 years. These are $350 to $400 million assets, so the barriers to entry is high, and also there's, I would say, an important element of offshore wind is a lack of a platform, lack of experience, and lack of people who can actually do this and show the track record behind doing this type of work. So I think, and one element I want to also add before handing it over is the supply side. There will be a tier 1, tier 2, tier 3 market based on size of turbines. So what we are constructing are the tier 1 vessel, as we call it, that are able to build the future turbines that we see. And that is turbines that could be 22 to 28 megawatts. And then you have the older fleet, they stop at 15 megawatts. So there will be in time now when the new projects come on stream that we will see actually a falling supply of vessels based on how the world looks today. So definitely echo the graphs from Clarkson's there on the market outlook.
That sounds like very good fundamentals, right? My question is maybe a follow-up question, if you don't mind. You just said it's shortage of 30 vessels, right? And we do know vessels are being built as we speak. Do we have a view of how many vessels are being constructed right now, and what are the major shipbuilding nations in this regard?
So we are seeing 5 vessels under construction, so you can name each and every one of them. So there's 2 from us, and then you have Cavalier, and then you have Veneti. And of course you have some other vessels that will go into different type of markets, but they are being built in China. We're building in China and also Korea.
Thanks. So just going from a wind installation, maybe a little bit, even during, not wind installation, but later on during the construction phase, there's a lot of smaller vessels required to support the wind farms and the construction of it. And part of it we are operating as well as CTVs. And CTVs have become more in demand. Personally, I've never found the CTVs in my life before, but it is a very growing industry, in particular in Europe, but also in Asia. And Ingmar, I saw recently a press announcement from a company called NAV Engineering Technology, who's looking into this particular. Maybe you want to elaborate on it and what drove you to drive this forward?
Yes, I think a lot has been said about the, let's say, mid-long-term positive outlook for the wind offshore industry. So we as NAV Engineering, part of the Newport Shipping Group, we will construct, or as you said, also design, construct, and also operate CTV business. Why CTV? We think it's a very good market entry point, and CTV is very often considered a bit of the backbone of the business. So the idea is that we will construct in the beginning 8 vessels, which we then construct and design is ready shortly. It's 25 meters and 35 meters design, hybrid, operated for the, let's say, North Baltic Sea and Irish Sea. And currently we are in the process of teaming up with established operators in the market. So when the ships are delivered, we start to deliver in 2024, so next year with the first vessels. So then we will operate with, let's say, a company which has a track record towards the market. Because for us it's important, with a new design, entering the market, it might be a bit difficult to find attractive employment. But that's why we decided to join forces with an established player which can open the market for us.
Thanks, Ingmar. So actually, I should be upset, right? Because you're
Yes.
a potentially new competitor of ours.
Yes, maybe not really. Yeah, in a way, yes.
But actually, yeah.
we think there is still room for new players in the market. And yeah, but you're right, yes.
No, but I'm actually very pleased because you support our analysis. That's a good market, which you want to enter, and which we entered a few. Probably last year, we acquired a company called, or integrated company called HST Marine, and we are focusing on hybrid CTV vessels. And we see an increasing demand, in particular also on the hybrid side and lowering emissions, particularly in Europe, more efficiencies, but also customers demand it. I think Pontus mentioned it in the morning. Customers demand lower emissions, and this segment provides for it that you actually can have this discussion with your client. Having said so, we talked about wind installation, we talked about CTVs. We are actually in a space, and Kenglin was not able to join, but we're also doing CSOVs on our side. That's basically following the wind installation and working in tandem as well with CTVs. But ultimately, I want to hand over. I don't want to let you sit here quietly, Steve. So the question always comes, it is a relatively new industry, right? An exciting industry, a growing industry, energy transition industry. But as part of it, obviously, there's a lot of capital required from the equity side, but also as a maturing industry on the offshore wind side now on the financing side. So maybe you can outline a little bit from your view how the market has evolved, how banks and other potential financing sources look at it, and what you have seen.
Yeah, this is a new sector, so banks are approaching this market differently, and we don't see an established way of financing this asset class as of yet. Some banks are looking from more established players where they can provide some comfort in terms of track record in the shipping space. Others are looking from a more project or cash flow perspective. There are a few local players who are relying on regional industrial perspective as well and tapping on the local liquidity. We see some deals being done in the market where comfort is derived from credit enhancement mechanisms such as export credit insurances or long-term charters. And there is a large demand, so we have a lot of queries regarding this asset class, financings, and we see a lot of opportunities, but we see also that it will be some time before we see an established way of financing this asset class as a whole. And there will be a few people that look at it from more, established players, track record. There will be others that will be looking into onboarding new clients, but seeing also from a value proposition point of view, measure against risk allocation. So, it depends from banks to banks, I would say, but we definitely see a large demand, and it also largely depends on the whole decarbonization trajectory, where depending on the building of the offshore infrastructure, you will see a large demand in terms of financing requirements, and banks will continue to look at this positively.
Yeah. Sorry to be critical. I was an ex-bank. I don't want to be critical as such, but I think the challenge, not the challenge is, it's an evolving industry, right? And as an industry without a lot of history, right? The credit assessment of such industries makes it more difficult. Personally, my experiences, we are involved in the CTV side. I've been almost 20 years in banking. I never financed a CTV. So, and I'm along peers, right? So it's a lot of education from our side, also going to, I educated myself to evolve it. But what I hear correctly is that when it comes to Basel or when it comes to capital allocation, basically within banks, our sector qualifies significantly for capital allocation going forward, which is the prerequisite.
I would say the industry or the banking industry has yet to learn about this asset class. And correctly, as you pointed out, capital allocation today is higher than other established asset classes, given that there's no track record in this space. There's only a number of deals that are being financed yet. I think that would get better over time as there are more deals coming in for financing in this space and banks get more familiar. It also takes a learning curve for the risk officers to learn about the industry and starting to see how the risks are allocated across the different players in the market, including the banks, and how we can establish a track record and you can have some capital relief in that respect.
I want to leave it a little bit to my colleagues as well. We have a CFO and ex-banker, myself, looking at financing for Purus Marine. How do you see it in the market at the moment when it comes to sourcing financing, and how do you look at it, and how do you think it's strategically you position yourself?
Yeah, so I would say, the 30 vessels I mentioned earlier, that's a $12 billion investment that the industry is needed, that the industry needs. What we see during our processes is that there are some banks really taking the lead, have done a lot of work over the last couple of years. And then we have a second group that are very keen on being involved in this. They have it on their agenda that they have to invest in offshore wind and greener industries. But you can say that they are basically deeper into the bank, to the credit committees. When we come with a jack-up, it doesn't rhyme very well based on the restructuring they've been through with the similar assets back in the days. And then you have a third group that is not interested, and that's basically more the educational part, where we see that we have to be at conferences like this speaking about our industry. There's not that many deals around. So there is a major shortage of capital to cater for this. But I would say it's also a good thing. It also means that the banks are also making sure that the industry is disciplined. And we see that also linking that up to the supply demand that we just talked about, that we are seeing in the market that we're not going to invest because we won't necessarily have financing in place. That means that to get financing, we need to force the charter or the developers to actually give us longer contracts. And we are seeing that in the market, where traditionally it's been one-year contracts, which is not enough for our owners and the banks to basically finance a new vessel. And we're now seeing 3-year contracts, 5-year contracts emerging in the market. So I think it is a good thing also that we are in the process to maybe build a more disciplined market or disciplined shipping segment than maybe for the more commoditized segments based on this. So.
Yeah, if I may, from your point of view, let's put it that way. If you go to a financial institution and ask for finance of a CTV, where we talk about, let's say, a new building cost of 6 million euros per piece, I can tell you one answer is too small. Okay, you say too small. Okay, that's one thing. Then charter employment, you're absolutely right. Because the dilemma, not the dilemma, also on the CTV side, the normal contract is a year. So, on top of this, what you see then in banks is who's responsible? Is it the infrastructure team? Is it the shipping team? Is it the offshore team? Yeah, which team is responsible? And listen, being an ex-banker, don't take the banks, they don't want discipline, really. No. So what I really hope that a lot of financial institutions really allocate resources towards a dedicated team for wind offshore. And there is so much available data from brokers, so they cannot argue there is no information available. There is plenty of information from the leading broker houses. So, listen, I don't want to sound negative, but especially when you have a small asset with small amounts and with maybe not long-term employment, it's not so easy.
I can echo that. I think, but what we've seen over the last year and the maturity of the banks and the ones we've engaged with has developed quite quickly. So I think, this is just a maturity stage also, I think, for the banks internally, and also how, as you mentioned, how they structure themselves to make sure that they understand the dynamics, because it's not apples and apples here, even though it's a jacket from our side and a vessel with no contract for your side.
Maybe I can just add to it, because I'm based in Asia, basically. for the last 15 years, and I have a business to look at it for the debt financing side. So I've been traveling quite a lot back to Europe. But I have, over the last 18 months, seen tremendous interest and acceleration on the financing side. It will take quite a bit, and that's a positive note, actually, because it's also an opportunity for the market players who are in the segment, right, and this discipline. But I do see a lot of interest, and in particular also in the Asian market, when it comes 18 months ago, I would say there was interest, but there was not many active projects at that point of time. But this has developed quite a bit over the last 18 months. Ships are being built here, offshore market except China has already been there, and Taiwan has been there, Japan is developing, Korea is developing, Vietnam is developing. A lot of countries also at a lower scale look at it compared to Europe. So I do think there is a lot of acceleration coming, but I do sense what you said, that it is a new asset class, in particular for CTVs. It has been an asset class which has not been widely banked in the institutional banking side. It has been commercial banking side or the smaller banking side of the business or corporate banking side. So I do sense it, but on the positive note, I do see that there is a lot of interest, what you mentioned, Steve, on the capital allocation side. It is an energy transition, it's energy security for certain countries. So I'm optimistic there that we get there.
I think there is, again, as I mentioned earlier, a learning curve to be done by most of the banks, also from the risk officers, because there has been some, as noted, some overhang regarding the offshore sector as a whole. Obviously, banks won't repeat that mistake, but there's also different dynamics in terms of renewable wind, which banks also need to learn. And there are certain data points that banks can take comfort, from the more established markets in Europe, as well as the growing sectors in Asia, where you had some mistakes done in the recent past, where banks can learn from it and then correct their mistakes.
I think there's a lot of positive development here, and I think it's the first time on the Marine Money. I mean, we talk about bulkers, tankers, energy transition now. I hope offshore wind will be here for the next years to come, and we can repeat it, and we will see how it's developing, actually. And there will be more and more traction in Asia. I'm quite certain about it, because I see it in our company. And I see more and more people coming out to Asia, actually, to look at it. So I do think there's a lot coming, but I think we have 3 more minutes left, and I want to leave some time for the panelists here to explain a little bit, and that's a last shot, just like, why do you think, and that can be from multiple views, right? Why do you think offshore wind is maybe a good sector and industry for investor to come in, for a bank to come in, and potentially also what we are lacking is resources, people to come in. So I do think it's a very, very attractive industry. So I leave it with you. I don't know who wants to start, but it's good to make some marketing for our industry.
Yeah. No, I think speaking on our behalf then, I would say we have the supply-demand situation as being shown here today is one thing. We have an industry where the levelized cost of energy is actually competitive. We are not heavily dependent on subsidies as of now. From our side, we are generating very strong returns with fairly expensive assets, not necessarily a perfect fit for today's turbines. So the returns are good. Cash flow generation, we're talking EBITDA margin between 70 to 80%. And I think it's also important to mention that it's future-proof, the industry as such. And we don't see the wave of green investments and capital flowing into to our industry to disappear in the first 5 to 10, 15 years. So.
I can go next. Yeah. So I mean, oil and gas is staying for a bit of time still, but I think on a macro level, everybody kind of agrees that we need to transition, and this sector is representing that is at the very beginning. So we need to learn about the industry, but it's for the good, to move slowly from oil and gas to more renewable sources of energy, and it's kind of a future-proof, as mentioned. Yeah.
Thanks a lot. Maybe to add, I think to take away is the demand fundamentals are completely different, right? It is energy transition is fundamentally energy security driving it. The demand is developing. There are technological developments which are exciting and we might cause a little bit of delays, but the demand is there. It is there. It's very, very exciting. I think from an employee perspective, it is not a boring market. You have different regional markets, you have a lot of banks you have to talk to. When you're on the financing side, you have a lot of technological, different kind of assets you're talking to, different kind of clients. It's a very exciting market actually to be part of. It's not commoditized, in my view. And so it will be part of energy transition. We will be part of it. I'm certain about it. It will allow for people to transition over in a new industry. I mean, there's a lot of transferable skills from other industries which can be used in our industry. So I think it's a very, very exciting time to be part of it. And I look forward. I thank the pen. Oh, sure.
Quickly, yeah, no, because just the last word maybe from my side.
Yes.
You know, because
Oh, I forgot you.
Yes.
Yeah, Ingmar.
Yeah.
So sorry. That's when competition starts.
No, listen, I don't want to repeat how positive the outlook and all these things is. But maybe, you know, coming back to our little venture, I mean, we enter the CTV market because, as I said, it's really the backbone, and I think it's a very good starting point to grow up the value chain within the wind offshore industry. And in order to facilitate all this, we are also happy to talk to potential investors who are interested to follow it with us. So, sorry I want to at least mention it at the end.
Thanks, Ingmar. That's I didn't want to cut you short, right? So I didn't want to cut the marketing. No, it was a very, very interesting. Thanks a lot for coming over from Europe. I think we will see you hopefully back next year. We will have hopefully a new panel next year, and we'll see how it developed. And thanks for the audience to listen to us.